Hey everybody, Darren and Eric here. We've got some good news we want to share with you today. There's things that are going on in the housing market and interest rates. It's been a crazy year so far, but there's a lot of great things happening. Hi, Eric. Thanks for joining me.
Hi, Darren, and hi, everybody. Yes. Now, Darren, you said you wanted me to get into the weeds on everything today, right?
Yeah, it just depends on how long everybody has. If you want to take a couple hours. So
Awesome.
That's one nice thing. If you give Eric a shout and want to chat and get into the deep weeds and numbers analysis, he'll go as far down that road as you want to go, right?
Probably further. Yes.
That's right. Much further. All right, cool. Well, let's start with interest rates. What's going on? Where have we been the last month? Where are we right now?
Yeah. So everyone's heard of the rates going up way up, and it kind of freaked everybody out. There was a little bit of shock factor there for over the last few months, and the last 2 weeks things have maybe slightly more than 2 weeks, they've sort of dipped back down a little bit, and actually quite a bit, significantly. I think rates topped out in like the mid sixes with an APR somewhere around 6.62 when we looked at it. Right now, it went dark on me, but it's we were looking at rates right around, right around the well, hold on a second. 4.99% with an APR of right around 5.218. So not a bad. You're going to pay a little bit for that rate. That's with a permanent buy down of about a percentage point to get to the fours. But we're talking in the fours again, which I don't know, Darren, did you think we'd be talking about the fours this soon?
No, at least not that fast. I mean, it's gone really fast. In fact, we were looking at a chart just recently, and the rates have almost kind of gotten to where they were pre-COVID.
Yeah, that's true.
So if you slice COVID out of the whole picture, rates would almost look somewhat flat.
That's true. And before COVID, we were talking about that, huh? How we were thinking, okay, they're kind of on a trajectory to hit about where they are right now. So It could be worse. Let's just put it that way.
Yeah, it's nice to see a little equilibrium happening in the market. Some of this dip happened, from what we can tell, after the Fed announced an increase in the short-term rates, which means they're fighting inflation. And whenever the Fed fights inflation, it means it's going to push long-term rates like mortgage rates down, which is great.
Right. Exactly it.
Yeah. So home affordability, that's the big question that comes up. In fact, we were meeting with somebody today, and I think that question came up 3 times. How do I afford a house? Lower rates are a very big part of that, of course. What are some other strategies that are out there that you're seeing right now to help home buyers here in Utah afford that house?
I think a lot of people have sidelined themselves temporarily because the shock factor, right? So the first thing is maybe just jumping back in, getting a new quote, and looking what these current rates can do. Because some people were like, oh my gosh, my payment just doubled or went up by 50%, and so I'm out. But now they've come back quite a bit. So that's the first thing, is probably getting a fresh quote. That will feel a lot different than it did, say, 3 weeks ago.
Yeah. And, to compound that, you were chatting with a real estate agent today, just getting some numbers here on the Wasatch Front, how many homes are listed for sale. A year ago, we were roughly around 2,500. And now what are we at? 8,500?
Yeah, he's at somewhere in the mid 8,000, 8,500 range for current listing or current homes on the market on the Wasatch Front, basically.
Yeah, that's super nice to see. That means there's a lot more options of homes that are available. But on top of that, it also means that's going to put some downward pressure on prices. So, a home that was selling maybe or listed, 800,000 2 or 3 months ago might be listed now closer to 700,000. And I'm just throwing numbers out here arbitrarily. Yeah. And then you get the lower interest rates. Now we're actually coming back into a range of affordability for a lot of people.
Yeah, absolutely. And a little more willingness maybe to play ball from the sellers. Like there's a program right now out. I remember we saw this, Darren, we saw this a lot when we first got in the business in the late 90s, early 2000s, where they had this program called the 2-1 buy down. And it's sort of a weird name. There's a 1-1 buy down as well. And I won't get too much into the weeds, don't worry. But basically,
we're good.
well, you can call us if you have questions about that. But basically, it's a way that you can get a fixed interest rate. So it's still like, for example, a 30-year fixed rate, but you can get a lower rate for the first 1 or 2 years. And who pays for that? Well, you can pay for it yourself, or if the seller or the builder is willing to play ball, they can actually cover those costs as part of like your upfront closing costs. And so it can make a real substantial difference in your payment for 1 or 2 years while you sort of get used to being a homeowner if you're a first-time home buyer, or get used to these a little bit higher rates. It can help soften that blow for a couple of years. So anyway, that's something that some of these lenders are rolling out.
I mean, heck, if we get lower rates in a year, then, that gives you a lower rate for a year, and then you refinance potentially into something a little bit lower too.
Yeah. So, good point.
Just creative thinking in terms of how you structure that, because look, the bottom line is we know that the goal is that house. I mean, that's what you want. And actually what's funny is we were talking about this just yesterday. Sometimes the whole idea of getting a mortgage is actually a big barrier for somebody who actually wants the house. And so, Eric, you, I, and our team, we're set up to help people the very best we can, using the very best tools that are out there, help people get that house that they want. That's the whole goal, with the best finance package available.
True. Yeah, programs and different rates and different strategies to get that payment low. It's true. People do. I mean, they want the house and like, okay, I have to get the mortgage, so I'll talk to these guys. It's true. It's sort of like the thing that maybe you don't want to do. But then the cool thing is when we talk to people, one of the things I love is when they get to the point where they realize they have an advocate and someone who's actually helping them solve a real issue. And all of a sudden, everything changes. They see us as really truly a member of the team, helping them get into their home, and a solutions group, kind of a consultant in a way. And it changes everything. And I love to get to that point, because that's my favorite part of doing this. Yeah. So it's fun. It's fun to help.
Yeah, I'm with you. And it's great being an independent mortgage broker where we're not working for any particular bank, but we have access to literally hundreds of different lenders out there and their programs. And, they're actually kind of fighting each other because they want business too. They want us to send them business. And so they're sending over incentives all the time. We had just a lender the other day who came out and said, we will beat anybody's rate. We'll have the lowest rates no matter what. So now we're able to pass those rates on to the customers. It's great, actually.
It is really great. Yeah. Huge help.
Okay, cool. So if somebody's looking to get a house right now, or is planning on getting a house anytime in the near future, let's say near future is in the next 12 months, what do they need to do?
Probably the best thing to do is the very, very first thing I would do if it was me, I would hop on. They can go to sweetmortgagedeals.com, set up a consultation with us. They can even read a little bit on there to kind of get a feel for who we are and what we do. But set up a consultation. It's totally no obligation. So that's what I would do first. Talk to someone, put our experience to work for you. We've both been doing this for over 20 years. Put our experience to work and let us help you solve it. We know you have questions, and the new guy or girl that just got into the business who isn't really quite sure of themselves. I mean, we were all there yet. We're all there at one time. I'm not throwing stones, but it's a huge difference between that and someone who's been doing this for a long time, figuring out how these programs work together and which one can take the variables you have, your story, and turn it into a success story with loans. So with getting the right loan. So that's probably the first thing I do. I'd consult with someone like us who has some experience, and that doesn't have to take long. I mean, that first conversation can be 15, 20 minutes, maybe a half hour. It doesn't have to take a long time. If you get the right information out there and you have someone that really knows the programs. So that's what I would do first, is get that consultation. And then from there, it can be all the other stuff, the documents and everything else. But that's where you begin.
Yeah, that's absolutely right. So we want you to get the most affordable payment you can get, the best structure you can get, so you can get that amazing house that you're looking forward to getting. That's what it's all about, that the American dream. So, okay, cool. Well, so go to sweetmortgagedeals.com, like Eric said. Book a call. If you want to get that going, you can apply online. You can read. There's a whole bunch of resources there just for you. Or you can call us directly, 801-888-7468. And you'll have a chance to chat with myself or Eric or Nathan, Rachel, or Heather. Got an amazing team, probably the best team we've ever had, to be honest with you, right, Eric?
Oh, yes. Great team. Yeah.
Our team's awesome right now. So cheerful team, happy to help in any way we can. Okay, great. Well, that's all I've got today.
That's all I've got. Give us a call. Good to talk with you.